my yields there. Right, so FOMC summary: the dollar is strong, yields are firm. Um, the minutes of the 25-26 meeting of the FOMC revealed that there is a wide range of opinions in the committee. So we got a bit of a mixed reaction. Initially, we were strong out of the blocks with the US dollar. If I can bring up the sort of 15-minute chart. Now let's go down to a 5-minute chart. That gives a better picture. And the minutes came out at 2 o'clock. So the dollar was strong out of the block, and then it tailed off. And that there, for me, was lining up for a continuation to the downside. But the support, the old resistance, Wednesday the 16th, I did flag, held up. And unfortunate for our bias today, that led to a continuation. There were a couple of the participants on the committee that had actually favoured leaving the target range for the Fed's funds rate unchanged in July. That's what the minutes showed. And at the same time, a large majority of them saw upside risks to inflation. So there was a two-way outlook at the board really, which therefore required further tightening for July. The minutes have confirmed that there is a dependency on data, and this is essentially what Skipper Powell had expressed in his conference after that meeting on July the 26th. The participants expected that the data arriving in coming months are going to help clarify the extent to which disinflation process was continuing. So, as ever, we're data dependent, and that's basically given the green light to the dollar bulls just to keep going. But when you compare this with other central banks besides the Bank of England, really, in the main, potentially the Bank of Canada as well, and then you throw in the disinflationary outlook in China, and then prospects of a hard landing, recessions and so forth, the dollar tends to do well, regardless. And if it's balanced one way or the other, the dollar is going to pick up a bid fundamentally in that respect. Technically, I was wrong. My thesis was wrong, and that's okay. I can't be right 100% of the time. If we're right 50, 60% of the time, and we've got an edge in our trading, and bear with me. And if we have an edge in our trading and um, we manage our risk and let our runners run, then we're going to be all right. So looking ahead, the FOMC is still expected to remain on hold. Definitely next month they're expected, but as we get towards November, there's a possibility. The markets are showing a 40% possibility of a rate hike in November. There are some that expect that the Fed will be on hold for the rest of the year. Um, so let's see. We've got another CPI report next month ahead of the meeting. So let's see. Then moving to the charts. Then, well, we're looking at the dollar there. If we pull this out to a daily chart, right? I keep coming back to this box that we're building. It's forever rising, and we're heading right up now into last month's low. Okay, so if we get a breakout of that, I think that could be the catalyst then for finally our move back to the downside. So let's see how things pan out over the course of today, Thursday. We're going to go over to the euro. and have a look at the euro. So the trade in the euro came in the open um, on Wall Street, and then it tailed off from there on like everything else. But this was the outcome I was expecting in the open, but no cigar. We didn't get the. For me, I didn't have the criteria to get involved. I wanted to see a break of structure and at least a tap in to get involved in that move up, but it just rallied without us. So where are we now? And when you get this sort of topping effect, it's very risky then to get into the market when we're seeing that resistance. So anyone that failed on the euro today, taking it long, low, for next time, learn from this one that this is a topping formation. Yes, we've broken structure, but now we've got this top, double top. So it's not impossible the market won't continue up, but it's less likely. So if you do get involved lower down, then you want to edge into that. And then once you've got that break of the double top, then that's when you can reassess your higher probability for a continuation higher. And you can always add to your position. You don't have to go in all in on every trade. You gauge it by um, the higher the probability the setup is. So on the downside now, what are we looking at? Pump, dump, creeping trend down, closing below the prior day's close, bearish. Again, monthly lows in sight, double top, double bottom lows. There's bound to be stops under there. 108.20 could be the target. All right, we've got that area here. I'm trying to highlight. I can't for some reason, so using that there. So that area there is going to be a potential area of support if we can get below these double bottoms on the daily chart. So we've got here, that's a very strong move, taking out the lows. Okay. I'm being asked for gold. So really, I mean, my bias here then is short. You know, we're the front side of the trend hasn't paid off on the day count. I'm just going to get rid of all these markings. All right. So we could have a continuation according to the 3-day cycle day count. Um, a move to the downside, as I've noted, towards 108.20. Gold, so it came into our first target and it's starting to stall. So with these peak formations, we've been eroded, so we can disregard those. And we stayed with the offer. Personally, I do not like chasing trends. Um, but we can't deny that we're in a bearish environment. And I'm sitting on my hands and watching it go by. That's fine by me. Um, if I were to get involved in a market that's already falling, then I would need to see um, in my preferred session, so the US, I would want to have seen a move up before the session opens and then the continuation. Um, so during the session, as it's just falling away, when it's a 50-50 chance that it could just turn on a dime, then I'm reluctant to get involved, even on a 70-30 possibility that it goes, that it continues. And it's just not the way that I'm programmed to trade it. Okay, so any other that we should look at, guys? Any other pairs? Let me know. Let me know. US 30 was a really nice start. Looked very promising for the day ahead, and again flipped over. So at the start of the day, for those that were in the meeting, watched the videos, I was arguing my case for the upside, noting that we were trapping volume all the way all down here, right? So before the open, which is this, the Wall Street open, 9:30 in New York. This for me was volume that was getting trapped. We had a huge sell-off here, and there were prospects of a almighty squeeze, and I had my eyes set even on coming back up into level 3 of that drop. So there was still great opportunity in here with the move up. Um, for me, I was set on um, the S&P. Wasn't quite impressive, but it still gave good returns. Within several minutes, I was in and out, and it was great. But with this Dow, um, this has been the laggard in respect to the downside, with in comparison to the S&P and Nasdaq. My eyes aren't focused. There you go. The US 30 has been more of a sort of a creeper to the downside, and if you recall, we'd been talking about with this rally that because it had towards it was I think Monday or Tuesday, I was inviting the market to come in to the 38.2. So we had that yesterday, and there was a reasonable area given the break below last week's lows. Um, the break of last week's lows, that orange dotted line, more often than not, 80% of breakouts fail, and you tend to see a pullback. So that's what I was in anticipation of today. It didn't play out this time. That's fine. Well, it did momentarily, but it was short-lived. And when you've got a big event later in the day, so if you're trading before red news, um, personally, what I find it's better to nail and bail, trade the market, get out before the news, or if you want to leave a trailer, a portion of your trade on. You never know what's going to happen with the news, um, but more than likely you're going to be whipsawed out of that position. So just leave it. I would leave a small percentage of my position on if I wanted, if that's what I felt was appropriate. But if you're trading ahead of big news events, what I find is that the market's not going to run. It's going to give you maybe half of what you might get on any other normal day. So, be happy with taking what the market gives you. Um, Maybe even, I mean, for me, I had a predetermined area where I wanted to take profit in that S&P, for instance. I can't remember where it was. I'd have to bring up my uh, 5-minute chart. I actually traded this on a 1 minute. Just trying to speed through this. Yeah, it was up in. It was basically just a scalp in the open up into the level two, rather than leaving it on and, you know, being determined by a change of wind. You know, when you've got red news later in the day, um, it's unlikely to give you a full-on trade. So, in terms of looking forward now, well, there's no reason why this can't keep coming in, and we've got a 50% mean reversion target down here, 34,667, and that starts to align with higher volumes at the base of this candle, at the tips of these candles. You'd expect this to be a supportive area if the market manages to get down there. Okay, and any further down, you're into the 61.8, and then this is bound to be a high volume area where you've got this indent in that rally, that blue candle, if you can see that, and then going left, just going to drag this down. We've got these resistances as well, aligning with that area, lower down. Sorry, over here. Okay, so if the market does manage to come down there, then so be it, and all the power to the bears in completing this harmonic W formation. The sell-off coming into the neckline. Okay, so it looks about right. Now, that's not to say that this is just going to plummet. I mean, this could be staggered. It could move up back into resistance, right? So I'm coming in again. Just bear with me a sec, guys. Sorry, 1 second. Right. Looking to what else? So, guys, what else? Looking at gold. Let's have a look at gold. Or have we covered gold? Sorry, I can't remember. No, we've covered gold, haven't we? So, same real scenario for gold. Continuation, but prospects of a pullback before coming in. It's actually coming into the support area, so I think this is less likely to just fall away. We're bound to get some traction at some point. You know, all of this in here is a demand area that we're coming into. Yeah, we did cover gold because I said I didn't want to chase it. Yeah, coming into demand. Any other pairs you want me to go through, guys? Euro Oz. Okay. Euro Oz, Euro Oz, Euro Oz. This too just kept running. There was an opportunity in London to short. Over here. So this was sort of stacked up high. This moved up in Asia. So a strong move up was followed by a subsequent drop. So pump, dump. And then we were just sort of staggered for the rest of the day. Has this got much mileage? I don't know. Someone would argue we've got an inverse head and shoulders for the move up. But I'm just wary that this dollar needs to correct. Um, I say needs to, but the most likely scenario is that it will. In that case, the euro dollar should come under pressure, and all things euro under pressure as well. We were talking about the euro dollar um, sinking below yesterday's close into these lows. So if this dollar does finally retreat, then this is going to be a double bottom low and prospects for a potentially a 3-day move combining Wednesday, Thursday, and Friday. So Wednesday starting the move, maybe petering out, targeting last month's lows. But I mean, this is all pie in the sky stuff. We don't know what's going to happen. But I'm just giving you a scenario because we're going to have stops below this low, and you've got the divergence theme that is weighing on the euro, with the European Central Bank dovish and the Fed being construed as hawkish, as governed by these minutes that came out today. But I mean, who knows? When you get to these sort of extremes, you haven't really got anything to go by, right? There's no real structure. I mean, we can look all the way over to here, but I mean, how relevant is it going to be um, when you go that far out? But we can draw lines, and we can argue that we're coming up towards support. If we break that support there, you've got stops, low hanging fruit, right the way down to last month's lows. So I'll draw that in. I mean, it's already there for you, but for a number, 108.33. So in terms of Aussie Euro AUD, we're just looking at for you, Alex. Tonight we have the Aussie unemployment data or employment data, but the number that is most popular out of all of that, that the market tends to put focus of more focused, is the unemployment number. Right. So, and the data today will go in to the outlook for the Australian Central Bank, and the data tonight is expected to pull back. The jobs growth is expected to pull back after very strong prints in well, not very strong, but stronger prints in May and June. Seasonally, July is not a month where most hiring goes on. People are off for their winter holidays in Australia at this time of year. So the data is going to be key for your Euro Aussie tonight. That is trying to break up higher in its cycle. But again, at these extremes, it's difficult to analyze really technically. I mean, we can go as far out as May 2020. I mean, how relevant is May 2020 compared to 2023? It's a completely different market, but nonetheless, there are levels that we can monitor. So we've broken October 2020's highs. Um, but for me, once we start chipping away at these levels, the market's going to get exhausted. People are going to take profits. I say people, I mean, large money is going to start looking to take up the market, and I tend to see a pullback. Most breakouts fail. So tonight's data could be the catalyst in terms of the Aussie. Some Aussie strength coming in would derail that rally. Um, it's currently taking out last week's highs. Again, most breakouts fail, right? So, and if you monitor this as per I mean, it's a bit choppy, but nonetheless, we've got this bullish impulse, if you can call it that, but this move up and then the correction. And what I like to do is I like to measure the correction, which is down to here, up to the high of the rally. So you've got the rally's high and then the corrective low. And what I like to see is the price at least reach the minus 27.2. So that would come up close to the 170 level. So 169.80. So maybe we've got some juice in this. Perhaps the data will be the catalyst, because the data can give two-way price action, right? So the volatility around such data can tip into the targets, and then we can see the pullback. Excuse me. Okay. And that will bring us to a conclusion, really, unless anyone's got any other questions. Tomorrow morning, I'll give us an outlook for the New York session. And tomorrow, we don't have any red news on the calendar for the US or for any nation. UK retail sales at the end of the week is about really the hottest data point we've got left for the week. So maybe we'll get some normalization into the markets and we'll get some momentum in these moves. So the dust is likely to settle over today, and then Friday could be the clean out. So let's stick to the plan, stick to the game plan. Let's not be rocked by the volatility that we've seen. Summer months, some would argue, well, you don't get volatility during the summer months, but I would argue that you do, especially over data, and that's what we've seen today. That's what we've seen all week. I think really trying to hold on to, someone asked me, are these summer months a good time to trade? It really depends on your style. If you're swing trading and position trading, then it's going to be choppy. And I mean, we're seeing direction in the dollar and the dollar yen. But I think for me, anyway, just nailing and bailing. So spotting an opportunity, easing your way into it, and prepared to cut it early if it's just not giving you that impression that it's going to continue, right? So there's a couple of ways of going about it: easing into it, or you can go all in and just taper, prematurely and assess it and go back in. But I think day trading the Wall Street Open, if we're here in the US, guys, the Wall Street Open is where we're going to see these sharp, impulsive moves, parabolic. We're yet to see any runners, but for instance, I'll bring up the dollar CAD that was traded today. So I took this after the data. I don't like to be in ahead of the data. Blah, 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 blah. Bear with me, please. Was it today or yesterday? I'm getting confused. I think it was today, wasn't it? Bear with me. Yeah, so yeah. Sorry, it wasn't the data. It was just the Wall Street Open. Uh, 1 minute chart. Where are you? So, on the open, and it's essentially, what we were looking for in other areas, such as the dollar yen, this uh, sterling yen, the euro dollar on the flip side, the other way around, Aussie dollar, etc. So, same setups. I mean, if you traded sterling Aussie instead of sterling yen, you would have got a favourable outcome. But these are the sorts of trades that we can be looking for in the open. They're a pretty safe bet when you're all stacked up like this. So you've got a rise. Let me bring up my 3-day cycle chart. So with plenty of days long, breakout traders in the market. That was yesterday. So with plenty of days long in the market. On the session itself, we were pumped up from the London lows, right? So we've come up, we've come up, we've come up, we've started to consolidate. Right, so you've got this pumping effect, pump up, pump up. So, like I was saying in the morning meeting, where is the money? So, you've got all of these longs in the market that are in the money. So, we're looking for the long squeeze, and that was that trade there. And that was what, 50 pips in a few moments. Right, so this is what I mean about being in and out. 20 pips, sorry. In and out. Right, we've got red news coming up. There's little direction in some of these markets, so that was the outcome. So it's about being set up, prepared at the Wall Street Open. Um, and looking for these build up of longs, or the other way around, build up of shorts coming down to squeeze. Okay, and around the open at 9:30 New York, this is where we're going to find these explosive moves, and you just got to be sharp on your feet and ready to maneuver at the right time when you see the price action you want to see. Okay, guys, so I think we'll leave it there. People are starting to sign out, so have a great afternoon, and I shall see you for the next round, which is Thursday morning, bright and early US session. Have a very good afternoon, evening, morning, wherever you are in the world. Thank you for attending.